Hey, how's it going, everyone? I am Dan Lomar, CFP professional with United Wealth Management, where we specialize in PRAP management and financial planning for pilots at United Airlines. And like many of you, my business partner, Alan Beal, and I are both pilots for United. Welcome back to another video. Hey, it is that time of year to review your PRAP contributions because if you hit the limits, they got turned off. You want to make sure they get turned back on in December. And then besides that, the January or 2023 limits are increasing. It's a good kind of review things to make sure you can hit the limits or avoid the limits or whatever you want to do in your particular situation. That's what we're talking about today. Hey, before we get going, remember to subscribe, hit the bell icon so that you know when new videos come out. And if you would share this video, I always say those who are not watching are probably the ones who need to watch it the most. So pass this good information on to our fellow pilots. And as always, don't take this as tax, legal, or investment advice. You decide how it applies in your particular situation. Let's jump right into it. So in 2023, let's talk about the limits first, because obviously they change. They go up a little bit each year. And they took a pretty good jump in 2023. The first thing I'll talk about is that the personal contributions, technically, they're called elective deferrals, and you can put $22,500 into a 401k. If you're over 50, you can put an additional $7,500 into a 401k, and over 50, that rule applies to if you turn 50 or older at any time during the year. It applies for the full year. The defined contribution, so the maximum you can put into a 401k is $66,000. However, you can always put the $7,500 catch-up contribution in on top of that, which means that if you're over 50, the maximum that you can put in, I say you and the company, the maximum that can go in there is $73,500. If you're under 50, it's $66,000. And then the company puts in 16%, which is limited by math to $52,800. And what I mean by that is the IRS has this thing called the annual compensation limit. And they say, hey, any income above this amount, we don't want that income or any portion of that income to go into a 401k. And that limit in 2023 is $330,000. If you take 16% of that, $52,800 is what that ends up being. So that's the maximum the company can put in there. Let's look at the contribution types. This is where it gets a little bit confusing, and this is what we are reviewing. So there are two big types. You got pilot contributions, you got company contributions. Company is 16%. That's a contractual agreement. It's always pre-tax, always goes into the traditional 401k. We've actually got two 401ks inside of our PRAP. We've got a traditional where money goes in pre-tax, and then it comes out taxed in retirement. And we've also got a 401k where money goes in after taxes. So after the taxes are taken out of your paycheck, then that contribution goes in. But then when they come out in retirement, it is it's tax-free. So those kind of got those two different 401ks in there. And because of that, the pilot has a couple different decisions to make. We can make pre-tax contributions, we can make Roth contributions, or we can make a combination of both of those. And then we can make post-tax contributions. So the first thing we do is we make the decision, do we want to make pre-tax and or Roth contributions. Those things fill up to the IRS limits, and then post-tax contributions can be put in after that. Now, the advantage of post-tax contributions is that the post-tax contributions technically go into the traditional 401k. But you have the ability in our PRAP, you have the ability to make post-tax Roth conversions. It's a setting on the PRAP website. And so as soon as they go into the 401k, if the automatic conversions are turned on, as soon as they go into the PRAP, they can be converted into Roth 401k, which means they would then grow tax-free, come out tax-free in retirement. So that's a big ability to do. That's a great opportunity to have that. And that's why post-tax contributions are a very important consideration. So one, for that reason, and two, they can really add to RHA spillover. I'm not going to get into RHA spillover in this video, but it is my next video, and I'll allude on that a little bit more then. So anyway, let me talk about these post-tax Roth conversions. A couple things to be aware of. Last year at the end of 2021, they tried to pass a new tax law which would have done away with the ability to convert post-tax money into Roth 401ks. And also, if you're familiar, it would have done away with the backdoor Roth IRA. And so that tax law didn't pass. But what that tells me is that they probably in the future, it's probably, I wouldn't doubt it if that ability passed. So my thought about that after seeing that last year was I'm going to be aggressive in how I make post-tax contributions, try to take advantage of that while I can. And that's what I did. The other thing I'll say is that if you already have post-tax contributions in there, so maybe you've got a sizable amount or whatever amount, and there's any gains on that money, the gains are taxed upon conversion. So if you go in there and you had a big chunk of gains on previous post-tax contributions, just be aware when you convert that, it could have some tax implications. Other than that, if you don't have previous contributions, because they're automatic, there's nothing taxable because there's no gains on that money as soon as it gets converted. The other thing I'll say about it is that the Roth 401k is not the same as a Roth IRA. Every once in a while, I start talking about Roth 401k, and then a client or somebody will start automatically just slip in, oh yeah, that's my Roth IRA. No, two different things. They're different animals. They're similar, but a Roth IRA is outside the PRAP. It has income limits. Those income limits do not apply to a Roth 401k. So just kind of want to mention that to kind of keep them straight. This is what these contributions look like throughout the year. Pilot contributions coming here. I kind of think of them as starting from the bottom and filling the buckets up vertically. So you're making pre-tax and or Roth contributions first. They go in, they hit the $22,000 limit if you're under 50. And then once that limit is reached, then you can make post-tax contributions. The thing I'll say about that is that if you do want to make post-tax contributions, make sure that your pre-tax and or Roth contributions are high enough that you're going to hit that limit before the end of the year. So just if you do the math and say, well, I'm going to hit my $22,500 limit in December, well, that doesn't give you any time to make post-tax contributions because you're not going to have time left in the year, and the whole cycle starts over every January. So just kind of keep that in mind. Company contributions are always going in there throughout the year. And once all contributions hit $66,000, that's when they stop. That's the most that you can put in there. If there's time left in the year, company contributions go into the RHA. I'm not going to get into that right now. That's actually my next video. But more on that in the next video. If you're over 50, again, you can make pre-tax and or Roth contributions. You can make Roth. You can make catch-up contributions. Catch-up contributions are not an election. It's just it happens automatically. You're just allowed to put $7,500 more in there if you're over 50. So there's nothing really you need to do to make that happen. And again, that limit, $30,000. Once that is reached, then you can make post-tax contributions. And then company contributions are the same. Once they all add up to $73,500, that's when they all stop. And you'd have RHA spillover if that was something you were looking for. And again, I'm going to talk more about that on my on next video. So that's kind of the way they look from the bottom up. This is what it looks like on the PRAP website. In this particular case, we got a 20% contribution in pre-tax elected deferrals going on. 0 Roth, we got 20% post-tax. You can preset the post-tax contribution setting. You do not have to monitor this. You do not have to come back later in the year and say, oh, my IRS limits are reached, therefore I'm going to make my post-tax contributions now. Nope, the system knows that as soon as your IRS pre-tax or Roth limits are reached, it automatically kicks in post-tax contributions if that's what you want and there's time left in the year. And then here's this automatic Roth rollover. This is selected to on. And so what that means is anytime these post-tax contributions are coming into the 401k, they automatically get converted into the Roth 401k. So just kind of keep that in mind. And again, if you turn that on, there's already post-tax contributions in there with some gains, just keep in mind it could be a taxable event for you. The contribution conversion is not taxed. It's only the gains that are taxed. This is what it looks like later in the year. It's kind of where we are right now. So if you hit your IRS limits and they turned off your contributions, they automatically turn them to zero. You do not need to monitor this. This automatically happens once these limits get reached. They automatically turn them to zero. And what happens is a couple days later, then they come in here and they schedule them to be turned back on to whatever your previous elections were. And so what happens, 3 days later, they schedule them to come back on. Mine happens to be December 9th. I don't know if that's for everybody or just me. I called Schwab and then asked them about this today. And this is what happens. So they schedule them, and what happens, you get this conflicting transactions message. And all that means is that there is a conflict between what is scheduled to happen and what your current settings are. So if you happen to agree to this, which then what that's, if you check this box, what that's going to do is it's actually going to keep them to zero, and it's not going to convert them back. Big picture on this is the way I understand it. I've never observed this in real time. I'm going to this year just to see see how this plays out. The big picture on this is just come back mid-December for yourself and make sure all these things happen and that your settings, I would say probably check it before the 15th and just make sure. And then if you're not sure about it, just call Schwab. Just say, hey, I want to make sure my settings are right for January according to what you want them to be. What should your settings be? Well, how much should you contribute? That's really, I'm going to get a lot more into my next video on RHA spillover and kind of like how different contribution settings can lead to more RHA spillover, or if you want to avoid RHA spillover. That's really what the next video topic is about. And the other thing too is which one's better, pre-tax and or Roth. I'm not going to get into that in this video. That is a whole nother topic on its own. And it really comes down to individual situation. I do have the checklist down below you can download that kind of gives a little bit of guidance on that. And again, that's 2022, and I'll have that. Those are 2022 numbers in that checklist. I'll have those updated as soon as the 2023 checklist comes out. But it'll give you a little bit of idea, but I will do another video in early 2023 about just kind of some things to consider. And again, you can look at the video. I've already got it out there. I did it a couple of years ago just to kind of give you some same ideas of different numbers, just the same concept. Hey, like I said, next video, RHA spillover. Hey, thanks for tuning into this one. I appreciate the positive feedback. It goes a long way. Remember to subscribe, hit the bell icon so that you know when new videos come out. Share this video. And again, if you got questions about this stuff, I'm really pretty good about answering questions on email. Shoot me an email, dan@unitedwealthmanagement.com. And if you're considering hiring an advisor or a financial planner, let's sit down and talk. My first conversation is always very informal, just kind of get to know each other and make sure we fit and work well together. So, hey, anyway, thanks for tuning in. Until next time, fly safe.